Hello guys, welcome to another video. In this video, I'm going to be teaching you guys how to master liquidity with these 6 trading patterns. These are my 6 liquidity trading patterns where I used to trade the market. If you stay to the end of the video, there's a little secret where I'm going to show you how to apply them on the chart and how you will be able to see them on the charts very well. Stay with me and let's get started. So welcome back guys. These 6 trading patterns I used to trade both gold, BTC, USD JPY, GBJPY and some other currency pairs. Sometimes I call this one the cool pattern, the hot pattern, the happy pattern, the blue pattern, and I call this one sometimes I call it the white pattern and the black pattern. And I just like to name it like that because in case if I drop a setup in my community, I'll be able to state which kind of pattern I'm seeing in the market. If you are interested in joining my community, there's a link in the description below. So let's start with the bull pattern. Now let's say market is in a bullish trend. Market is creating series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now the cool pattern can only form whenever price comes back and take the higher low. The higher low, each higher low in this market structure is a liquidity. This is a liquidity level. 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 And this also is a liquidity level. Cool pattern can only occur when price comes back and take the recent higher low. That is when only this trading pattern will occur, this cool pattern. Only when price comes back and take the recent higher low and price will mitigate your POI and starts going bullish. Some people call it structural liquidity because price is breaking the recent higher high. Break of structure, then break of structure again. This cool pattern can only occur when price comes back and take the recent higher low. This I also call it the cool pattern, and it's also called liquidity after a break of structure. It's only form when price break the recent higher high. That is for cool pattern. Cool pattern only form when market is in a bullish trend, taking the recent higher high, breaking the recent higher high. Then if market wants to come back and grab liquidity to form a cool pattern, it must come back and take the recent lower high. That is when this cool pattern occur. Now let me talk about the hot pattern. This hot pattern is the same as the cool pattern but the bearish version of the cool pattern. That's why I call it the hot pattern. This is the cool pattern and this is the hot pattern. Now for the hot pattern, it's also the bearish version of the cool pattern. When market is in a downtrend, creating series of lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Market is breaking the recent lower low. It is called hot pattern because market is breaking the recent lower low. And anytime you see price coming back to grab the lower high, it's called a structural. It's also called a structural liquidity, which is the hot pattern. Is the bearish version of the cool pattern. Bearish version of the cool pattern is that market is in a downtrend, breaking the recent lower low. Then if market retraces back, grab the recent lower high, that is when we call it hot pattern. This is a liquidity pattern because there is liquidity at every lower high and lower low in the market. There's liquidity here, there's liquidity here, there's also liquidity here. There's liquidity here at the higher high, liquidity, 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 liquidity. There's liquidity in every lower low and lower high in the market. Every swing level, there's liquidity. But stay to the end of the video. I'm going to show you how you'll be able to spot those liquidity pattern in the markets. Now, this is the hot pattern that I just finished explaining to you guys. This is the hot pattern, which is the bearish version of the cool pattern. Now, let's talk about the blue pattern. The blue pattern, which is this one guy right here. I call it the blue pattern because it's liquidity before a break of structure. Remember what I told you guys before? All these patterns are liquidity after a break of structure. After a break of structure, liquidity after a break of structure. But this one I'm about to talk, which is the blue pattern, is liquidity before a break of structure. Hold on guys, let me draw it out for you. Liquidity before a break of structure. Let's say market is in the bullish trend. This is for the blue pattern. Market is in a bullish trend. Then market gave us liquidity before a break of structure. As you can see, liquidity at this high, liquidity at this high, liquidity at this high. Then you will see market come back to grab internal liquidity, which is the blue pattern, liquidity before a break of structure. Market gave us liquidity before a break of structure. This is the blue pattern right here. We have break of structure, break of structure, break of structure. But what made this very important is that there is liquidity before a break of structure. Market is in a bullish trend, breaking the recent higher high, higher high, higher high. But what made this very special is that market gave us liquidity before a break of structure, which is this liquidity trading pattern, which is the blue trading pattern. The blue trading pattern, liquidity before a break of structure. This is for the blue pattern. These ones, the cool pattern and the hot pattern, are liquidity after a break of structure. But this right here is liquidity before a break of structure. Now this is for the bullish version of blue pattern. Now the bearish version of the blue pattern is what I call the happy pattern, which is this trading pattern right here, which is this trading pattern, liquidity before a break of structure, but the bearish version of the blue pattern. Now let me explain for you guys. Liquidity before a break of structure. Let's say market is in a bearish trend, creating series of lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. As you can see, market is breaking the recent lower low, lower low, lower low. But what made this liquidity, what made this lower high protected is that market gave us liquidity before a break of structure. You will see market tends to come back to grab this liquidity before it continues the bearish move. Let me explain again. Market is in a bearish trend, creating series of lower low, lower high, lower low, lower high, lower low. What made this lower high special from the rest is that it has liquidity before the break of this low. So if market is coming back into this lower high, it means this liquidity, market is coming back to grab this liquidity, which is liquidity before a break of structure, which is why I also call it the happy pattern. also call it the happy pattern, which is liquidity before a break of structure. These ones are liquidity after a break of structure. These ones are liquidity before the break of the recent low or high, before BOS, before break of structure. I hope you guys are getting what I'm trying to say now. Now, I've explained the cool pattern, the hot pattern, the blue pattern, and the happy pattern. Liquidity after a break of structure, structural liquidity. Liquidity after a break of structure, structural liquidity. Liquidity before a break of structure. Those are the main liquidity trading pattern you should understand. There are two types of liquidity. We have liquidity after a break of structure and liquidity before a break of structure. That is what you should understand. Now, let's continue. This one is called the white pattern and this one is called the black pattern. There are also liquidity after a break of structure. The market is in a bullish trend. Break of structure, break of structure, break of structure, break of structure, break of structure. So what made this higher high protected is that market gave us structural liquidity after a break of structure. So you can see market, the difference between this one, which is this liquidity after a break of structure, the bullish version, and this one is that market tapped into an order block here, market tapped into a breaker block here. So there are two types of POIs. In my next video, maybe I'll be explaining what POIs are. But the difference between these two is that market tapped into a breaker block here and market tapped into an order block here. And also the bearish version of this, of the white pattern. Bearish version of the white pattern. So liquidity after a break of structure, also liquidity after a break of structure. So you guys should keep just these 6 trading pattern in your trading journal. Now, if you want to master liquidity trading strategy very well, just keep these 6 trading pattern in your trading journal. So anytime you see them in the market, you'll be able to recognize it. There are different trading patterns out there on YouTube, but these are just the 6 trading pattern that is very important. The most common one is that we have liquidity before a break of structure and we have liquidity after a break of structure. Just keep these 6 and you are good to go. Don't be scrolling from one YouTube video to another to look for one good trading pattern. Just these 6 is enough for you. We are seeing the year is just starting. We are seeing 2020. The year is just starting. So master these 6 trading patterns and I guarantee you'll be able to trade the forex market than last year. Okay. Now, I said I wanted to show you guys how you are going to spot it on the market. Now, the secret in able to spot all these trading patterns I'm giving you guys now in the market is I make use of this type of candle. I call it this type of candle is called the Heikin-Ashi candle. The Heikin-Ashi candle. Most traders don't use Heikin-Ashi candle, but me, I use the Heikin-Ashi candle because it helps me to identify those liquidity zones very well, and it also helps me to identify market structure very well. The Heikin-Ashi candle is very, very important. Most traders do it because they don't understand it. But as for me, I've been using it for more than 1.5 years now. The Heikin-Ashi candle, I've been using it with my liquidity trading pattern. So to be able to spot those kind of liquidity pattern in the market, you have to make use of this Heikin-Ashi candle. the Heikin-Ashi. I hope you guys can see it, the Heikin-Ashi candle. Now let's try to look for those trading patterns in the market. These liquidity trading patterns. Where is it? This liquidity trading patterns I showed you guys earlier. So we have one right here now. We have one. Let's go to a 5 minutes. I took this trade today. We have this break of structure. If you look at gold chart very well on the 5 minute time frame, we can see that market break this recent lower low. Then market created liquidity. Then all these are just noise to just distract traders. And as you can see, market came back to that liquidity. Then boom, look at how fast it is. Look at how fast. And while I was able to spot that already from the 15 minutes time frame, then I moved to the 5 minutes time frame to be able to check it very well. But I was able to spot it on the 15 minutes time frame. As you can see right here, we have this liquidity. I was able to spot it very well on the 15 minutes time frame. Break of structure, liquidity, and market start going bearish. And which type of trading pattern is that? It is the black trading pattern. The black trading pattern. We have seen the black trading pattern. Now, I trade gold a lot. And these 6 trading patterns have helped me throughout my trading journey. And now let's try to look for another trading pattern in the market on gold charts. Let's try to look for another trading pattern on gold charts. Now, we could see white pattern again right here. I could see white pattern right here because market break structure. As you can see, market broke. Okay, let me show you guys well. Okay, now we could see white trading pattern right here. This is white trading pattern. Market break this recent high, then give us another liquidity and tap into this other block and start going bullish. So that was what caused this major bull run. As you can see, Heikin-Ashi candle is just an indication that is going to help you identify those liquidity trading patterns very well in the market. Make use of this Heikin-Ashi candle and see how you'll be able to spot them in the market. Make use of this. Rather be using your normal candle. I'm not saying you should not use your normal candlestick candle. You can use that, but make use of this Heikin-Ashi candle chart to be able to identify this liquidity trading pattern. So please do well to subscribe to this channel, and I'll see you in the next video.